Guarantees and indemnities have onerous clauses so that the party who is granting the guarantee often will not be able to give a proper assessment of the full extent of their risk. What this means is that the bank might pursue the principal debtor, or if the principal debtor defaults on the payment of the loan, could even pursue you, the person who wants to give the guarantee, before they pursue the principal debtor or try to liquidate or sell the asset that is the subject of the security. What this means is that you have a really unknown liability at an unknown time for which the bank is able to pursue you for the payment of any loan that's the subject of the guarantee. In other words, you're underwriting the bank. You're making sure the bank is going to receive its payments, and you're making sure that if the bank doesn't ever receive a payment, or there's some event of default, or there's some other circumstances that give rise to why the principal borrower may have defaulted, that you will ensure that the bank is never out of pocket. Not only are you guaranteeing monies, but you're also granting what is known as an indemnity. An indemnity means that the bank can pursue you for the money and its losses, even its legal losses if it has to go to court to try to recover any money from you, and you've got no way of stopping them from doing so. There is no circle or fence around the extent of your risk. Your risk is really quite unknown. The document known as the bank guarantee and indemnity might say that they can only pursue their reasonable costs. But do you really want to get into an argument as to whether or not costs are reasonable in all the circumstances that the bank is seeking for you to pay? In my view, guarantees and indemnities are really the bank saying that they don't really want to lend the money. And if they want to lend the money, they're not really certain that they've got proper security over the asset, or that the security is not going to be sufficient to cover any of their losses or costs. So they're asking you, where you may not have any benefit of the loan, to guarantee them, the bank, that they're going to receive all of the proceeds under the loan arrangement. Now, banks make billions of dollars a year, and yet they want you to grant them a guarantee and an indemnity. Now, if contrary to our legal advice you decide that you want to grant this guarantee and indemnity, you need to make sure that you've got financial advice. So you need to see a financial advisor, and you need to make sure that you know that at any time the bank could pursue you if there is an event of default by the principal borrower. What that means is you need to have readily available the amount of money that the bank may pursue you for. Now, realistically, it might be the case that the bank is not going to pursue you for the full amount of the debt in circumstances where there's a simple default of the payment or on the death of the principal borrower. It doesn't make good business sense to do that. That might be the position. But it can do it. And you do have that liability, and you do have that risk. And it's for those reasons that we say, why would you enter into an arrangement of that nature where you can't precisely limit the extent of the liability that you've incurred under the guarantee, and where you effectively write a blank cheque to the bank to say that you'll indemnify the bank against any of its losses in just entering into an ordinary business arrangement which the bank does. And that is, gives them finance to people, allows them to loan money, and enables them to get money from the bank, for which they're now asking you to give a guarantee and an indemnity. Additionally, you may not be able to pull out of the indemnity and guarantee at any time. You may try, but if the circumstances arise where you want to withdraw your indemnity and guarantee, the principal borrower may then be required firstly to repay the full amount of the debt before you'll be released. Now you can see that that's fairly onerous. You can't just turn around and say tomorrow, you know what, I now no longer want to be a guarantor in respect of this particular loan, or I no longer want to make sure that the bank will never suffer a loss. So I want you to make sure before you see the lawyers today that you've read the loan document, that you understand the loan document, that you've read the guarantee document and the indemnity document. If you haven't done that, I'd like you to indicate that to the receptionist and ask for some time to read the documents. We'll give you a cup of coffee while you read the documents, but we need to make sure that you understand the extent of the potential losses that could be incurred as a result of entering into these very onerous arrangements. Once you've read the documents, that is the guarantee and indemnity, once you understand that your risk is really unlimited and that you're guaranteeing the bank never to suffer a loss, and if you're still prepared, even contrary to our advice, to enter into that arrangement, we'll arrange for a lawyer to come and speak to you briefly in respect of the clauses of the guarantee and indemnity. But it's very important that you understand that guarantees and indemnities ought not to be given lightly. You shouldn't be entering into them because you don't really know the extent of your losses and what you're precisely guaranteeing. You may not get a benefit out of the guarantee at all that you're giving, and for that reason we don't recommend that you enter into it. If English is not your first language, you should indicate that. If you need the documents to be interpreted, you should also indicate that. You will need to be able to sign a certificate for us as your lawyers to indicate that you've understood the document, you've understood the extent of the liability, you've read the document, and that you are nevertheless prepared to enter into the arrangement of the guarantee and indemnity freely and voluntarily. For that reason, if husband and wife attend here, we'll need one of you to leave the room while we check with the other that it is truly a independently given guarantee without any pressure. That means freely given. I've had circumstances where husband and wife have come in and the guarantor was being requested by the husband, but the wife refused to enter into it because they're at the end of their marriage relationship anyway. So if you don't want to enter into this arrangement, you should indicate that to the lawyer. The lawyer may be able to explain what alternatives may be available. It's not likely that the bank will grant the finance in all of the circumstances, but you do have a right to negotiate with the bank. You do have the right to say to the bank, we don't want to enter into this arrangement. We don't want to provide you with the guarantee and indemnity that you're seeking from us because we don't think it's fair. So before you've entered into the guarantee, you may wish to consider other options that you have. For example, there may be other people who would be prepared to reduce the principal borrower's debt to give the bank the comfort so that a guarantee and indemnity arrangement might not be necessary. Or, alternatively, you may wish to say to the principal borrower that you're not prepared to enter into the guarantee arrangement and see whether the bank is prepared to make alternative arrangements for additional security over other assets. For example, a business or a house or a truck or anything else. So rather than taking the easiest and first available option of entering into a guarantee and indemnity, which in all of the circumstances is very onerous, give some thought to the alternatives. Take some financial advice about those alternatives and make sure that you think about it carefully. Just because you're here at the lawyer's office today doesn't mean that you have to proceed with entering into the guarantee and indemnity arrangement to secure the principal borrower's amount under the loan. Think about the alternatives. Whatever you're doing today has to be freely and voluntarily given. If it's not freely and voluntarily given, or you're going to be put under significant financial pressure, or it doesn't pass the sleep test, you can't sleep at night because you've given this guarantee and indemnity, then it's something that's not for you. If, however, you can see benefits, you've taken financial advice, you've given careful consideration to it, and even contrary to our legal advice, you still wish to enter into the document, then ask for one of our lawyers to speak to you to finalise the guarantee and indemnity arrangement.